Hi everyone, welcome back to another video. This is episode number 7 and this is my co-host.
Hello.
So today we're going to talk about our recent purchase. It wasn't recent actually, it was a few months ago, but our second stock that's in our little portfolio, and it's called Kiyosaki Asset Management, and it has a portfolio of different other companies. So this is what you call a diversified investment.
Oh, nice.
Remember Auntie Lilani was talking about diversifying your investments?
Yep.
Which means you spread your investments in different baskets and you don't put all your eggs into just one basket.
How come out of all of the companies you chose Kiyosaki Asset Management?
For the great dividends I mentioned before, the diversification, which means what?
I don't know.
Baskets and eggs. What does it mean?
Don't put everything in one basket, otherwise it will all crack.
So if they crack, then everything in the basket cracks. So that's what diversifying means.
That's why you should always have it equally spread out.
Right. So the best way is to buy a number of shares, but we're only able to buy in one company at the moment. So when we buy just this one share, it's already diversified. So we're very comfortable with buying Kiyosaki Asset Management for that reason. So there's the dividends, and also it's had a strong financial performance over the last few years, and it's been very undervalued. When we bought the share, it was, I can't remember.
Okay.
We'll show it later. And now it used to be down at 1 kina at the start of the year, and now it's at 1 kina 75 toya. So that's a 75% increase.
Really?
Coming from 1 kina. Yeah, that's a lot. So, and the last reason that we bought it is because it has the program called the Dividend Reinvestment Plan.
What is dividend reinvestment?
So instead of paying you money when there's dividends, we get to elect the option for us getting paid in shares instead of getting paid in money. And that's better because it avoids all the different fees of buying more shares. It avoids any taxes. And
What is tax?
tax is what you have to pay to the government. Goods and services,
I thought
everyone
it
pays tax. You get a salary, you pay tax.
was tax fees. I don't know.
So those are some things that you can avoid by going under this program called the Dividend Reinvestment Plan.
Dividend reinvestment.
And we're coming up to build up enough cash for another investment, so which will likely be early next year.
Nice.
If you want to find out more about companies and stocks, what can you do?
You can read more books about it, look into it. And what recommendations of books do you have?
Oh, funny you should ask me, because I have some books that I think are very useful here.
So some books.
And these are books that I think have been very useful to me over the years. This was one of the first ones. I think a lot of people know this book. What's it called?
Rich Dad, Poor Dad.
So one of the main ideas that Robert Kiyosaki talks about is that a house is not an asset. A house is a liability. It's only when you're able to rent the house out that it becomes an asset and it makes money for you. Otherwise, it's a huge liability.
Another book.
Yeah, this is actually by a friend of mine. I met him at the Berkshire Hathaway shareholders meeting, Tobias Carlisle, and he speaks a lot about deep value stocks. But me personally, I like growth stocks. This is what Bobbin introduced me to quite a few years ago, about 15 years ago. The Richest Man in Babylon. Yes. Yeah, it's an old book. It speaks a lot about securing yourself with insurance, with investing in shares, investing in assets that will grow over time. Very, very powerful book.
I've seen this book a few times on our bookshelf.
Yes, this is what Buffett usually recommends. Most people associate this with Buffett. He was taught by Benjamin Graham, the intelligent investor. So this one, it's a little complex, but there's some basic ideas in here that you could use, which is one of the main points that I got away from this book was Kina cost averaging. Remember what Kina cost averaging means? They say dollar cost averaging, but we say what?
Kina cost averaging.
What does it mean? It means to invest regularly, monthly or every 3 months, every 6 months, your choice, whatever you're comfortable with, whatever you can afford, and over time, it builds a lot of wealth and it doesn't time the market, whether the market's up or down. It averages out to be a good price that increases with the market. So that's what we're doing with our portfolio. Every month we invest 350 Kina and it goes into investing in more shares.
Daddy, can we put in all of the books that you recommended in the comments so then everybody can go see the name from the books?
That's a great idea. I think we'll do that.
So then they can go and find at least one of the books.
Yeah, sure. This is one of my eye-opener books. Because I always knew Tony Robbins. He finally came out with a financial book called Money, Master the Game, and I picked it up and it honestly kind of transformed my thinking because it highlighted a lot of different investors and people like Ray Dalio was a big one, and Warren Buffett, but I didn't really get into Warren Buffett until later that year. But
which book do you most recommend for people to read?
Well, I actually do recommend this book. He has another one called Unbreakable that came after this one, and I think it gives a good understanding of money, the psychology around money, and investing over the long term.
Oh, I've also seen this one on the shelf before.
Yep, this is about Warren Buffett, and his life just speaks all about compounding. If you understand the way he has lived his life, I think it'll make things easier to understand that you need to start early, and you allow the power of compounding take you to higher amounts. And I also like this one called the Dando Investor by Monish Pabrai. Is a big name in the value investing world, and he has a lot of videos on YouTube as well that you can follow. But this is a very, very good book about just the basic fundamentals around value investing.
If anybody wants, they can go to we're going to put the books in the comment section. So then if you want, you can go and find the books so then you can read it. So
this is our portfolio, and we finally added a stock, which is Kina Asset Management. We managed to buy Well, initially we bought 1,690 stocks of Kina Asset Management on the 27th of August this year, and later they paid a dividend. But as I was mentioning in my other videos, we signed up for the dividend reinvestment plan, and the reinvestment plan allowed us to have 169 extra shares. Instead of paying us in cash, they paid us in shares. So that was added on, and so we have a total of 1,859 Kina Asset Management shares, which we paid for at 2,397 Kina. So the value of that now is at 3,253, which means we're up 35% on that. And also the price of the Kina Asset Management has increased over this year as well, so that's improved a lot. And I didn't mention in my other videos, but we also did the same for Kina Securities. We bought 1,000 shares for 2,940 Kina. And then later, when the dividend went through, the dividend reinvestment plan allowed us to have, awarded us 56 extra shares. So that 1,000 turned into 1,056 shares. So that has increased 16%. And we're at a total value of 8,147 Kina, but our deposit has been 6,800. So that's how much we've put in over the years, about 2 years now. And this is the profit that we've made, 1,347. And that is a total return of 19%. S&P has returned 16.48 since we started, and our return has been 19%. So we're beating the S&P 500 at the moment, and we'll continue to monitor and see how we go with our little portfolio of just 2 shares now, 2 stocks, and follow up on our YouTube channel if you want to be updated on our progress. And this is where I keep the records for our deposits. So it's been over 2 years that we've put in, well, last year we were putting in 250 Kina each month. This year it's been 350 Kina each month. And so these are our breakups here. And this is that philosophy around investing periodically over time. That book I showed earlier about the richest man in Babylon, that speaks a lot about spending less than you earn, invest the rest, and live below your means. And if you're able to just put away 200, 350 every month and invest it, then it can accumulate into some really nice numbers. And you'll see with the power of compounding, you're able to reach some life-changing amounts. So I've spoken about this for a while now, and I decided to actually make these series of videos about compounding over long periods, and we're doing it in real time to give an example so people can follow and see the power of compounding your money. Thanks for joining. All right, I think that's it for us. We'll, if you have any comments, if you want any more information, please put in the comment. And we'll try to answer your questions in the comments.
Q&A.
And do a Q&A maybe in the future. All right, Merry Christmas and a Happy New Year.
Bye.
We'll see you in the next video.
Bye.
Today we're sponsored by Island Roots Clothing. Check out the details below.